Welcome to the Weekly Spark, your fast 5-minute flash of insight into the world of mortgage and real estate. Every week, we're here to ignite your understanding of the market, from mortgage rates and housing trends to legislative updates and insider strategies. So let's strike the match and spark your week. This is the Weekly Spark.
Welcome to the Weekly Spark. This week, I am Ryan, and Jason is also traveling. So we're going to split it up. We're going to do our own rendition of the Weekly Spark. So I'm going to jump right in, and I want to cover some things that I feel are important as far as marketing and networking and the fun stuff that you as real estate agents really want to focus on. So the first thing is hesitating buyers. Why are they hesitating? They're not saying no, they're just saying not yet. And there's a lot of complacency in the market. People are waiting for the rate cuts to come, as you see on the mainstream media all over the place, thinking that's going to be their savior of getting a lower interest rate. Really, the main reasons they're waiting are affordability, rates, and all of that media noise. So what they really, really want from you as the agent is confidence and permission to go ahead and make that move. So reframing your objections of waiting, we want to say the best time to buy is when the home fits your life, not necessarily when the rate is the best number that you're going to get, because you never write your rate on your check to pay your mortgage. And when rates drop, we can always refinance that. And I know that we've kind of gotten into trouble with this, with the date, the rate, marry the house kind of thing. And sometimes it doesn't come to fruition where they can refinance quickly, and that can put them into situations that they don't want to be in. But I want to instill with you that confidence transfers. If you're certain that they're going to be okay when they buy, they will trust you and they will work with you. Now, part 2 of this is the new referral economy. And I know that you've been preached to that social media is the way to go, and you've made posts and you haven't gotten leads and you're not getting a ton of views on some of this stuff, and that's okay. It's all about growth and timing and building it in. Referrals are obviously still the strongest, but they're built differently now. It's not necessarily about cold calling or doing lunches or anything like that. But today's micro touches, quick DMs, 30-second tips, local shout outs, focusing on what's important to your clients is what's going to help you win. Visibility and connection equals trust. So the referrals will flow through your social proof. So I promise you that one of the first things you're doing, that your clients are doing when they meet you, is going to your social media profile, seeing how active you are, seeing how educational you are, seeing how much time and effort you put in to getting information out there. They flow through the social proof with tags, shares, mentions, reviews, all of that stuff. That's what you should be focusing on. So the loan program that I want to focus on kind of goes back to those rates. So right now, obviously, rates are still a little bit elevated. They've started to come down in recent weeks in expectation of the rate cut. If we get to that rate cut day and they actually do go through with a cut, we might actually see rates go up for a little bit. And that's because of how the market prices things in early. What I would recommend to you is making sure that you're allowing your buyers to understand all of the pieces. So the ARM loans that we're doing right now, we're seeing rates that are 3/4 to a point to a whole point less than what you would see on a fixed rate. And that helps buyers have affordability. Now, the ARMs that I'm pricing are either 5-year or 7-year ARMs. Sometimes we go down to 3 years, but mainly 5 or 7. So that gives them a fixed rate for the next 5 to 7 years to see how all this rate mess is going to play out. That gives them security for the first 7 years. And a lot of times what we're doing is talking to these clients and figuring out what their goals are to make sure that these types of loans aren't putting them in bad situations later on down the line. But if their goal is to get into a house that they're going to use as a springboard into another house, or they only plan on being in this house for a certain amount of time, again, we can now give them some space to watch the rates situation unfold and then maybe refinance them into a fixed rate later on, which would be a better situation, short-term and long-term for them. So in closing, the buyers need confidence from you. Clients need connection. So if you're focused on confidence and connection and you are able to deliver both, you'll be the agent they choose and refer to their friends. Have a good week.
That's a wrap for this week's edition of the Weekly Spark, brought to you by Creative First Mortgage. If you've got questions or want us to cover something next week, please let us know, shoot us a message, and until then, keep your deals moving and keep your week lit. See you next time.